like as a user, what you want is you want to like either have zero money left or you want to have a lot of money, right? That's kind of like what you care about. So I feel like that payout, you don't really care exactly the structure.
No, here's where I think that's not correct, right? Is that it's not just that you want to construct a lottery ticket, because there are infinitely many ways to construct lottery tickets, right? But it's that you want a lottery ticket that corresponds to this subreddit really happy at the same time that I am.
Not a dividend.
It's a tale of two clans.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate pun.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
And joining us today, we've got special guest Jeff, Perps pioneer and the people's champ at Hyperliquid.
Hey guys, thanks for having me on.
Thanks for being here. And I'm Steve, the head hype man at Dragonfly. We're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So, Jeff, for anybody who does not know you, you are the founder and CEO of Hyperliquid. Oh, I don't know if it's CEO, but whatever. You are the founder of Hyperliquid. And Hyperliquid, of course, is the fastest growing perps exchange on DeFi. It has rocketed to become a top 15 token. Your now FTV is something like 35 to 40 billion with 12, 15 billion circulating depending on the day. You guys have now completely crushed all on-chain trading to become the single most dominant venue. You're kind of the man of the hour. How does it feel to have basically crushed it as an entrepreneur?
Well, I'll first caveat it by saying there are a lot of people working on Hyperliquid. It's not just us. I lead a small team. We're 11 people, Hyperliquid Labs. We're developers, the founder, CEO of that organization, but Hyperliquid is so much bigger. And so when people say, oh, your team is so small, I usually say, well, I don't think the core team is the right unit to think about. It's all the like really smart and talented people, whether they're developers or community members, marketers. Like, note that we have zero marketing team on the core side. All these people, all these really smart people coming together, spending their valuable time working on sort of adjacent and synergistic things that collectively become Hyperliquid, the ecosystem, the protocol. And yeah, so I wouldn't take that much credit for.
All right. So you're very humble. Let me just list some top line stats so people can know how much you are crushing it. So right now, Hyperliquid is dominating Onchain Perps volume. On any given day, they're roughly 75% of all volume in Onchain Perps. You've peaked now to all sexes, all centralized exchanges. Hyperliquid is something like 5% total market share of volume. And of open interest, you're something like 14% of all open interest across all chains. Among all exchanges globally, on any given day, you're something like 7th to 8th, depending on how you count the volumes. And you guys are rapidly gaining on many of the biggest exchanges in the world. You're currently something like 5 to 10% of Binance perps, depending on if you're looking at volume or open interest, but you're gaining on them, right? These charts have all been moving up and to the right. And you're now something like on the order of, what is it, roughly like $1 billion of annual run rate for the fees that are being generated by the protocol, which are being used programmatically to buy back the token. So this is a big part of why everybody is so galvanized by Hyperliquid. And then, of course, you've done all of this with no VC backing, so completely self-funded, and with one of the largest airdrops in history, over $1 billion. At present values, even more than that. But at the time of the airdrop, over $1 billion that was distributed to early users of the protocol. So you're very humble, and I think that's part of the reason why you're so beloved. I will say this: I have never seen a founder in crypto whose project was like at the center of the mind share in crypto. Right now, I'd say Hyperliquid is squarely at the center, who is universally loved. Like, even if I think back to like previous main characters, I think like your favorables are like probably like plus 40. I'd say more than any other person I've ever seen as a main character. Like, just people do not say bad stuff. They might say stuff about Hyperliquid, but they do not say bad things about Jeff.
Oh, appreciate it. Everyone's on
easy mode for me. Is that not your experience?
Well, I'm not as plugged into the like day-to-day dialogue and gossip and whatever. So I just always assume that stuff is being said, and historically has not been our strength, which is like navigating the perceptions of things. And so I think as a result, a lot of FUD is often spreading, and we do want to get better about that. And like part of that is kind of coming on these podcasts with great hosts like you guys and like talking through some of the misconceptions. But yeah, I think Hyperliquid is viewed favorably mainly because it's something new. It represents something new and something that kind of, in some ways, has already pushed what people thought DeFi could do, and in other ways represents what we think DeFi can be. And I think everyone can rally behind that. And I think the sort of like community, in some sense, like in many senses, like owns a lot more of it, right? In like the literal sense of like the platform, but also in terms of like what the protocol needs to do. I think it's like more reliant on the community than maybe some other protocols where it's more like top down, right? Like a centralized exchange is a good counterexample there. So yeah, I think for all these reasons, maybe people feel good, but I think it's this stuff's often temporary as well. Like I think there will be like rough patches. There were rough patches in the past, and I think for us, it's good to stay humble and kind of just keep building and not really like rest on the laurels.
And I can tell that's very core to how you operate personally, and it's admirable the way in which you kind of stay above the fray. And I think it's kind of typified in many ways. Part of Hyperliquid's brand is that they don't do the things that most crypto protocols do. Right, most crypto projects, they're out on Twitter every day, they're making memes, they're doing this stuff, and you guys are you let your product do the talking. And I think that's
the memes. They're
powerful.
Very good memes. They're just not made by us.
There are, yeah, exactly. It's like you're not stoking the flames, and you sort of let the product do the talking. And I think that in a way becomes its own brand, right? The brand of Hyperliquid is the sort of negative space of the team is not the one telling you this. People are using the product and they're telling you this. I think that's really powerful.
Yeah, I think this is kind of how crypto was originally meant to be. I think like I have immense respect for Satoshi, right? And I think that's like a much better example of all these things you're saying. We also have to be practical, right? Like if like people need to kind of know who's behind it, just that there's like element of trust. I think in crypto at this point is like there are many more eyeballs on it, so you can't really take the completely like clean approach. But I think it kind of harkens back to that. And I think I don't know why more teams don't do this.
I think because nobody would care for most teams if they weren't trying to force people to care for themselves. But I'm curious for you. So okay, you're building a decentralized exchange, right? The protocol itself is open and permissionless and so on. Do you ever envy founders of centralized exchanges that can do things that you can't necessarily do?
No, I very rarely envy them. I think people have this misconception that Hyperliquid is a centralized exchange, kind of like that is like the end goal. But from our perspective, like day to day, we think of Hyperliquid as something completely different. It's like a platform to house all of finance. That's kind of like the tagline that the community has kind of converged upon. And so maybe I envy them in that they're building something a little bit more well defined. So it's a bit clearer, and I think you can kind of go for more like metrics optimization, sort of like A/B test stuff. Like know exactly what you care about. You know exactly what your product is supposed to do. It's a very important product, and so yeah, maybe that aspect is somewhat enviable, but I wouldn't trade it by a long shot. I think like for us, it's what brings us sort of day-to-day excitement and what gets us out of bed is building something that doesn't exist, and we're like not exactly sure even what the right solution to these problems is. We just know that they're like in the future, this thing is good for the world, and like finance should be coordinated on this globally distributed, like permissionless ledger, like et cetera, et cetera. I can talk more about that stuff. But so when that's the vision, yeah, we don't think about the centralized exchanges really as competitors. Like Mark, like the stats you mentioned, it's like we track them, vaguely are aware of them, but ultimately, I see a world in which centralized exchanges like always have more volume than Hyperliquid, and that doesn't mean Hyperliquid has failed. And I also see a world in which Hyperliquid does like orders of magnitude more than centralized exchanges. That doesn't mean the centralized exchanges have failed either.
So you mentioned that it's easier to optimize for a metric to A/B test if you're a centralized exchange. What are the metrics at Hyperliquid? If you're not looking at the market share or volume or whatever, what are you looking at? How does the team orient itself?
When we started, I always pushed back on trying to define these metrics or KPIs or any like number that you attempt to use to tell the whole story. I always said this is for big projects, big companies, mature organizations that want to take incremental steps with high confidence. It's like numbers are good for that. But even at this point, you might argue that Hyperliquid is kind of big in that sense. But I still don't think there's like a well-defined quantitative way to measure success, and I think that's good, because I think once there is, like, I'm a bit cynical about this. Like once there are numbers and everyone like stares at those numbers all day, like a really bad example would be like token price, for example. If that's what you're optimizing for, then you start doing things that are actually good long term.
I find that very surprising. I don't know, Tom, what's your take on this? That, like, I would think an exchange would be one of the places where metrics, like the tie between metrics and success, are extremely legible compared to a lot of other kinds of products.
Yeah, I think I agree. Like token price is probably too lossy and not accurate of a metric to like be your North Star. But I mean, for you guys, maybe, obviously KPIs feed into a product roadmap. How do you think about what to do next? And I think also, like, what do you include in Hypercore versus what do you want to see someone else build, someone in the community build, and say, hey, no, we're going to be a platform here, and sort of let other people build on top of us and create value some other way.
So the first question around, like, it is surprising. I think there's like a distinction. I think metrics are good to track, but they're not good to be like objective functions. So like, I think when you convert something from like an indicator to something you're like literally kind of like performing back prop on, for example, I think that changes things a lot. Like I think there are many healthy things numbers you can look at, kind of like the things that Haseeb said at the beginning. Volume as a percentage of total volume, for example, is a good one. I think like that does tell a lot of the story. But if you kind of like change your perspective and say, now I want, all I care about is this metric, or like I significantly like care about this metric, you can do things like, there are ways to increase volume,
or do
even less extreme example, like on Hyperliquid, there's this thing that is kind of well known now, where the protocol kind of like prioritizes cancels over taker orders. I think many new things in DeFi and even blockchains themselves are kind of like using this into their like sequencing logic, or if they're now one kind of like block building logic. If Hyperliquid were like, okay, well, we care about volume above all else, you actually wouldn't make this change, because the net effect of this change is to decrease volume. And like maybe a centralized exchange would take this on, or maybe like a stock exchange like would take this on. But like if you're optimizing for like fees in some sense, like in some like local sense, then you look at this change, you're like, well, this is like a terrible change. But if you're a little bit more like first principles about it, and you think like, who are the real users of this platform? Like, let's improve execution for them. Then all of a sudden this change looks very good, even though no one's doing it. And
well, so that begs the question: who are the real users? When you say the real users, who are the real users?
That's a good question. It's hard to define, but I can tell you who's not a real user, and that is like,
who's not a real user?
Like toxic taking flow. I think this is a bit controversial, and so like I understand. Like I wrote those 2 long tweets, and this is sort of at the heart of that whole discussion, which is a bit nuanced. But I do think.
Well, let me maybe first set you up for that.
Subtract value.
Yeah, let me set you up for that, because we talked about it actually on a previous show. So there was a sort of dueling threads going back and forth between yourself and CZ, where you described the way in which Hyperliquid is transparent and allows everybody to see everybody's positions, everybody's stop losses, everybody's liquidation points. That is actually beneficial in some way to certain market participants and not to others. In particular, it hurts high-frequency takers, people who are kind of arbitraging orders very quickly and stuff like that. But it benefits market makers and kind of creates healthier liquidity for uninformed traders, or just people who are just kind of normally trading without having any advanced information. And CZ, and of course, all centralized exchanges don't operate in that model. In the centralized exchange world, that's absolutely not the way it works. You cannot see other people's positions. You don't know who owns this order on the order book. It's all opaque besides just the order book itself. And CZ's claim is that this is bad, and that we have to move towards some kind of privacy-preserving ZK something. And then you were called out by James Wynn, this viral trader who has just been kind of a phenomenon in crypto trading circles, who is this crazy leverage trader who got repeatedly stop loss hunted on Hyperliquid, and he claimed that, like, oh, there's a cabal that's after me and blah blah blah. Allegedly, alleged that there's a cabal that's after him trying to hunt his stop loss and so on. And so, given that context, I want to give you the opportunity to describe, like, when you say are real users. right? There's sort of different categories of users. There's hedge funds, there's high frequency makers, like, market makers. There's people like James Nguyen who are just, YOLOing huge globs of money. Who are the users of Hyperliquid that you really care about, and who don't you care about, and why don't you care about them?
Yeah, so I do think it's hard to define exactly who the real users are. I think like markets are basically ways to kind of move risk around, right? Like that's kind of like the general framework to think about it. So like in some sense, everyone's a user. Like everyone is who makes a trade, like helps move risk from, like allocate risk in like a better way than the previous state. So like everyone, you can imagine like all actors as little like inputs into this chaotic system that ultimately like sort of like maybe that converges on a better state of the world. So like every trade is like supposed to like kind of increase total utility if that's like how you want to measure it. That's like the theoretical description, but I think I don't think super strong about like who the exact set of users are. Like I don't think that's an important question to answer. There are a lot of interesting questions that are not important to answer. But I think one important answer is like, are there subsets of users that are kind of like predatory on the system? And I think this is a hard set to like define exactly, but ones that I'm relatively confident on is sort of like users who trade, whose counterparties regret trading against them, like very shortly after making the trade, which is to say like you're extracting value in a way that you're taking advantage of some sort of like usually technological asymmetry. And as a result, you make money, but you're not actually like pushing risk in a better way because your counterparty like immediately regrets making that trade. And the chance that like, they actually changed their mind is very low compared to the chance that you actually just picked them off because they weren't as fast as you. So like, I think that subset of users, like they add very little. They actually like don't improve the market. They just kind of like extract money from it. They're kind of like another exchange that is just like skimming off the top of like general volume. And so if you're like mental model is like a bunch of makers, a very simplistic model, not actually accurate, but if your model is like a bunch of makers coming in, being very like smart, having really sophisticated algorithms to like manage risk and then offer these like great quotes to takers, like maybe retail, maybe like institutions coming in and trading. This is all fine. This is great. And then the exchange kind of like charges a fee on top, like arguably like, that fee should be as low as possible, I think. But, exchanges building a platform, valuable service, et cetera. And then these takers come in and just start like picking off the makers. So the makers say like, I still need a quote because on average it's profitable, but I need to like widen my quotes so that like retail gets a worse price just so that these takers can come in and like skim their bit off the top. Like I think that it's a very simplistic model. I don't think it's this clear cut, but so I can go into more detail, but I think like the simple change of just prioritizing cancels above takers, like basically like cuts out a ton of this toxic flow and like doesn't actually impede price discovery because like no one really cares if like the price is like slightly inaccurate for like whatever, like less than a second or whatever time scale you choose. No like real users in some sense care about that. The only users who care about this are the toxic users. So I don't know if that explanation makes.
No, it does. If I can maybe summarize, the smart money, the ones who are the sort of high frequency, fancy infrastructure that are picking off these like real-time quotes and arbitraging, screw those people. We don't need them. No, don't screw them to our beautiful garden. Okay, well, not prioritize them.
Okay, maybe I'll provide a bit more nuance here. Like people running those strategies, I don't think they even realize. Like they will make many trades. Some of their trades are toxic. Some of them are not. I don't think they actually care. Like they're not malicious. They're just making the trades that make them money. So it's the system that is flawed. So like when you turn on like a slight cancel prioritization, these takers still make money. They trade against the orders that actually want to be filled. Like when a user places a limit order, they're very happy that there are many takers competing to trade against them as soon as possible. Like they choose to execute through a maker order. I think that's great. That's like great value add. So I think it's not that sophisticated takers are bad. It's that sophisticated takers picking off sophisticated makers, like that flow as a category is bad. Yeah.
Okay.
So I didn't mean to interrupt. I just wanted to
No, a
little more nuance.
No, that's great. And so, okay, to add a little bit more nuance and kind of bring it back to the conflict between you and CZ, part of the point that you made in your argument is that, look, in a fully transparent system, one of the advantages is essentially a kind of price discrimination or a kind of user discrimination, which is that I can say, look, this guy looks like James Nguyen. This guy looks like a YOLO crazy guy. And like this, if you're a cowboy, I'm willing to quote you really tight spreads because I know that you have no idea what you're doing. You're just throwing around crazy amount of money. You have no inside information. But if you are this kind of high frequency, toxic trader, maker, taker type person, I don't trust you. Like basically, I don't know that I want to fulfill your quotes as often as others. And in a Binance style world, I can't tell who is asking, basically who's hitting my bid. But in the Hyperliquid world, I can tell who's hitting my bid. And because of people have persistent accounts, because they have fee discounts and all that, over time you develop a reputation among the makers in Hyperliquid of who's good flow, who's bad flow, who's here kind of earnestly trading, and who's here running a sophisticated strategy that I don't necessarily want to be on the other side of. Is that a fair summary?
Yeah, I think so. One sort of nuance I would add there is that it's not about whether you're smart or dumb. For a market maker, what you care about is that you're not toxic. So like you may be really smart. Like I think like maybe James Wynn was making a very high EV bet. Like it's really hard to tell because trading is, you have so few samples,
really
it's so noisy. Right?
Yeah,
so,
really hard to tell.
Sorry. So like just in general, like take any trader. I think you would be hard pressed, even if you were like the smartest person in the world, to tell whether reliably whether like a random trader is getting lucky or they're making money, or they're getting unlucky or just like consistently have a losing strategy. I think that's like kind of the beauty of market. It's kind of like poker, right? It's like you actually you need a lot of samples to get significance. And I think like that's it. You need even more samples if your strategy is kind of like changing at all times, or like your inputs are like real world events. It's not even like a black box kind of game in that sense. So like, that's like one nuance. And so like for a market maker, all you really care about is like as a broad category of like market makers, like if you can hedge the flow coming in like on some other venue, then you're like, that's kind of like a lower bound on like, you're good. Like maybe you could be the smartest person, has like a great signal that realizes, like next week that, there's going to be some crazy world event that like some butterfly effect and like Bitcoin goes up. Like you might be the smartest person in the world. Like you can make that trade, and like market makers will still quote to you. So they don't care that you're smart or dumb. They just care like, oh, this guy's not like a toxic taker. So worst case, I can just like move my quote a little bit and then like hit like whatever Binance or like any other venue, like hedge it out, like collect the spread. I'm good.
Jeff, you are such a nice guy. That was such a gentle clarification that James Wynn is not dumb. I'm sure.
But I really don't know. I mean, I'm being genuine here. Yeah.
No. I look, I appreciate that. Okay. Well, let me bring you back to one more point. The backdrop of this also discussion between you and CZ was a previous episode that we also talked about on the podcast about JellyJelly. So JellyJelly was, of course, this token that was like this random shitcoin that got listed on, you guys listed a perp through Hyperliquid, and somebody basically performed call it an attack, for lack of a better word, against HLP. And it's, judging from the timeline of events, Binance listed the JellyJelly perp at the time that this episode was taking place, leading many people to believe that this was basically an attack from Binance on Hyperliquid. So I don't know how much you can or want to say or don't want to say, but I'm just curious, how do you think about the competitive pressure that you're facing from the incumbents today? Because I know, just reading tweets and reading the tea leaves, it's very obvious that the big players out there, the big centralized exchanges, they don't like you. They don't like what you're doing. And I don't know if you consider it to be a declaration of war, or how are you thinking about how you have to position Hyperliquid against this environment?
Yeah, I think I don't really know how various people think about Hyperliquid. I, like you said, can guess. Like you probably have a better idea than I do because you're reading the tea leaves more than I am. But I think it's good to have sort of like an adversarial mindset. Like the thing should still flourish even if all of these worst case scenarios are true. So that, like the solvency of the system should not depend on whether other people are malicious or think you're cool. Like that should not be an input into funds kind of like adding up to like the right number, right? Like so for me, the focus is always on designing the system, like thinking a lot about the system and how it can be guaranteed to work. So like guarantee is a strong word, and I think there can always be bugs. I think in any complicated system, it's not like a one shot, like you're done kind of thing. But I think it's important to have like a strong mathematical foundation. And I think it's important to be able to like write out and say like, look, like no matter what happens, like I can prove to you that like this complicated state machine like has these properties. And like one of those properties is that, it's solvent. And I think that is true for how Hyperliquid is written. So like the JellyJelly thing was unfortunate. I think it was the fundamental flaw, I think there's like a bit of misunderstanding here. Like it was not a flaw in the margining system. It was a flaw in like how HLP kind of like chose to collateralize one liquidation with like too much capital. And so like all these changes have been made. The margin system has also been improved in various ways, like margin tiers have rolled out. They're basically like at least 5 sort of like learning points. And I think it took several months to kind of fully implement all of them. But at this point, I think it's like the system is a lot stronger. And I think that there will be attacks in the future. There will be issues, but I kind of like have confidence that the protocol can kind of like rebound and generally learn and grow from anything malicious that happens to it. So
fair enough. Okay, so I want to transition into some questions that we solicited from the folks out there, because you're famously very reticent about going out there and kind of doing the whole podcast circuit. So we wanted to make sure that we made the best time of having you here. So one question we got from the audience was, if you weren't building Hyperliquid, what would you be building instead?
I really don't know. I've always been fascinated by markets, I think. So I've kind of like made a journey through, I got into physics in high school. It really spoke to me. It was like, math was always cool, but then physics, it was like, you could kind of take these like mathematical formulas and you're learning like you're learning calculus or whatever. And then you could use it to predict like how long it takes like a ball to roll down a ramp or something. Like that to me was like, what was amazing, because as someone who had like very little like real world capabilities, like a bit of a klutz, like not, whatever. So it felt like a superpower. And so that really drew me in. And then I think it's kind of natural for like physicists to kind of then kind of really find like economics and that kind of stuff very beautiful. It's like kind of messy systems, but you can still like say these very powerful things about them. And like incentives can really shape, well-designed incentives can like shape a lot of behavior, like coordinate a lot of behavior to like just generally improve the world. I think that's like really powerful. And so like for me, like markets have always been super beautiful, and like trading was a way to kind of basically just like an excuse to like study these things, like mathematical patterns in these like complicated noisy systems. And that's what drew me to trading initially. And yeah, so I don't know what I'd be doing, but I think Hyperliquid just felt like a supernatural next step, which is like, once you really understand a system, like you can kind of participate in the system and maybe like profit from the system. But if you really want to like make the system better, you kind of have to like improve the system itself. And so Hyperliquid is what I feel like the best way to do that. It's like once you see enough problems in the world and you kind of like shape your worldview, often I feel like many people would like take a stab at making the world better. And Hyperliquid is kind of that. So yeah, to answer the question, like I don't really know. I can't imagine doing anything else.
But before you built Hyperliquid, you were a trader, correct?
Yes.
Yeah, and so, oh, go ahead.
Okay, I was going to say, was trading on my own crypto exclusively. Yeah, it was fun.
Were you trading on dexes, on sexes, and was the animating energy behind building Hyperliquid was like, oh my god, these dexes all suck. Like I need to build this the right way.
There was a bit of that. So it was doing both. So centralized exchanges did the majority of the volume. So I think everyone was looking at them as like the pricing source and the just like general like flow. By 2022, we had turned towards dexes just as like a casting a wide net in terms of like what might be worth looking at. And my general reaction was not just that they sucked, but that there was potential. Like they did suck. Like I think there were a lot of like really, really poorly designed things back then. I think just people kind of learning firsthand, like the lessons that like finance had kind of like already learned. So there are a lot of like really dumb systems, but like,
can you give an example?
I think like non-KYC like RFQs is like a pretty bad idea. And I think many teams were working on this back then. Maybe it was like like a mini narrative or something, but like, I just think the idea fundamentally doesn't work. It kind of ties back to this whole like when things need to be, when like permissionless anonymous works and when it doesn't. And I think RFQ is like a great example where it doesn't. And you really do need a gatekeeper to like an OTC desk would never accept like anonymous flows, right? So that's one example of like kind of an obvious thing, but was prevalent. But I think the more important thing is that we saw the potential of DeFi, that like all the right pieces were there. And the only reason it wasn't taking off was that nobody was building like exactly like people were trying, but like nobody had really like hit the like exact like the correct combination of design decisions to build something that users can like that will convince users to actually use it.
What do you think that combination was? Like, what was the sort of minimum viable version of Hyperliquid that was necessary to crack things open? Like, obviously, people talk about it's a great product, it's very fast, it's very clean UX, great liquidity. But like, what do you think is that necessary ingredient that separated Hyperliquid?
I don't think it was one thing. So I always say it's like a combination. It's in exchanges. It's kind of like a weird product because, so maybe this is me speaking from ignorance about products in general, but I feel like many products you kind of like get one thing right. It's like a net new thing, and everyone's like, "Wow, that's amazing!" Like maybe like TikTok, you're just like, "Oh, you just like an endless feed, like that's so cool," and like yeah, you can improve the algorithm, etc. But like there was kind of like a step function like product thing that you did. But I think exchanges are not that. It's like you kind of like traders expect a lot of things, and like there are many different types of traders, and kind of need to like compromise on this like set of 100 features so that like most people are like mostly happy. Like some people want more complexity, some people want simpler interfaces. You kind of just have to like compromise on everything, and so it's just like kind of multidimensional optimization problem. And I think it maybe like back then people in DeFi were too focused on just getting the DeFi part to work. Like, oh, like how does the blockchain need to work? Like, you know, composability was this like big thing. It was like really hard to get right, and just like I think it's easy to get distracted and just not respect the core problem enough, which is that like it's actually very hard to build a good product for traders.
So one thing that a lot of people have been talking about is this new feature in Hyperliquid called HIP3. So let me see if I can explain what it is briefly, and you correct me if I get anything wrong. So HIP3 is a new protocol upgrade that's going to go live soon. And what HIP3 allows is for external parties to create their own perps markets. So they have to stake some hype, they have to provide an oracle, and this perp market is not necessarily going to be listed on the front end, but they can kind of use the infrastructure of Hyperliquid to, you know, basically tap into the overall ecosystem of Hyperliquid to launch a perp on anything else. And this anything else can be literally anything else. As long as it's got an oracle, you can do a perp on it. Is that a good summary?
Yeah. In fact, the oracle part is also abstracted away. So it's sort of like up to the deployer to figure out how the oracle works. So it's very general purpose. It's almost like you could even not have an oracle, right? You could even make like a contract that kind of like doesn't have funding, and it's more just like a future. Or like you could like turn funding off and just like make it more like a pre-launch style futures contract. So it's sort of like I view it as like HIP 1 and 2 sort of way back, you know, maybe almost a year ago, maybe more than a year ago, was like permissionless spot trading and like leverage this like on-chain order book thing that's super performant, but like you don't need to know the details about, but that like users are plugged into, and like you can just use the tech and kind of create native assets and trade them natively on chain. And then this is the kind of the counterpart, which is a much harder thing to build technically, because perps, like derivatives, are just like way more complicated than spot trading, but it's the counterpart. So it's like use this like complex infrastructure, but kind of like expose like a super nice API. Like users already used to their nice API of like interacting with it, trading on it, and like now like builders have a simple-ish API. I mean, it can probably be improved, but like relatively simple way to just plug what you want in, which is like like Oracle, so like contract specifications, and then focus. So you can like trust that the system does what it does, and you can kind of like you can understand that and like tweak that with these knobs that are exposed to you. But then after that, it kind of works, and then you just go and like find the users, build the interface, get your licenses, like whatever like you need to do to like ultimately
get your licenses. Yeah, that's right. Get your licenses, kids. And so one of the questions that I kept getting is, what are the markets that you're most excited to see people develop using HIP3?
Like it's almost like you said, it's like everything. I think perps are just a super good innovation. I don't think they're like a replacement for futures, but I think more than half of the futures flow would prefer perps. And it might be closer to like 80 or 90%. I think there's a part of like education, just like people don't realize you can do with perps what maybe you kind of traditionally associate with futures and options. And another thing is that I think the perp markets haven't achieved the liquidity of like TradFi futures markets. And like when it does, I do think the product offering is like even more compelling. So in that sense, it's it's more just like making this very crypto native, like innovative instrument and like an on-chain crypto aligned implementation of it available to anyone. So I'm not particularly excited about any one thing, though I think like TradFi as a whole could benefit from perps. And I think US regulators are coming to terms with that and like drafting legislation around it. So it's like a positive step. I do think it just makes markets better. And I think this can be.
So you're not going to say perps on stocks. You're not going to say perps on stocks. I think what everyone wants you to say is perps on stocks.
The question is which stocks, right? Like if you're telling me ES could be in a perp, sure, right? Like, but if you're telling me random biotech with 50 mil market cap should be a perp, probably not, right? Like,
well, I will say that there are options on all these things, right? Like sure. Options are really big for retail. And one point I'd make is I think perps should be basically preferred by all retail, because when you're trading options, you kind of care about two things. You care about volatility. You're kind of trading volatility, and you're also getting leverage, right? And I think very few retail traders like actually want to trade volatility. They actually just want leverage. And so perps are just like super easy to understand, and it's actually better because I think on options it's one, it's like very hard to quote, and very few people are set up to quote it. And the effect of that is you just get a worse price as a user. Like if you're the only one trading this like random, like out of the money, like long dated, it's just like there are too many instruments. Yeah.
But one counterpoint to that is that users who don't want to have constant interaction and keep checking their funding, checking their margin position, like users who want to just buy it and forget about it, and like hopefully it's a lottery ticket that pays them the money, which is a lot of the zero DTE users. I think there is actually excess complexity. So there is reasons for that market to be as big as it is, especially the 0 day, the way the 0 day options kind of blew up. A lot of it, if you look at the holders, they're not actively trading. Like you see market makers like flipping the spread, but then you see these people who just buy huge positions and then forget about them. And I do think there is an interesting trade-off between like these continuous pricing, but like dynamic price, so you can get blown out type of things, versus these like set it and forget it. And for some reason, traditional finance does have too many of the latter. I definitely agree with that, but I don't think you can like totally replace them. I think you're always going to be racemic with both of them.
Yeah, I would push back a bit. Like I think you can choose to not look at your perp position, and I would argue that that's quite similar to the payout function you want. Like if you set a high leverage position. So this is maybe not true.
So we know people can choose not to look, as we talked about James Wynn a little bit.
Oh,
isn't it better though? Like you can always sell your option before it expires as well, right? Well, I think it's an equivalent payout function. That's just like better liquidity.
I think Tarun's point is like there's path dependency, right? The path of the price between when you purchase the 0TT option and when it expires, like is kind of irrelevant as long as it hits. Like to Tarun's point around this lottery ticket versus like, yeah, if you're James Wynn, you might be maybe long-term right, even on the same time period about the price of Bitcoin, but you can still get liquidated. And that is like a weird concept, I think, for a lot of retail traders.
I think it's like, you don't see these like exotic options like Bermuda options or Asian options really that popular for retail, even though like they give you more of this continuous, you have to adjust more frequently payout. And those are only used in these kind of like large currency trades. So I guess all I'm saying is like, there's obviously a huge market for perps. I just think like there is also still this market for these kind of things where people don't think about them as like one touch hitting type of thing versus like thinking about the whole.
Yeah,
it's more like
I would just say you can build quite a good product here with perps though.
I'm not saying it's not possible. I'm just saying like I do think like retail investors do also love lottery tickets. In a way that
I think you can construct a very good lottery ticket with perps, I guess is what I'm saying, because like you can
go ahead. Finish your thought.
Like as a user, what you want is you want to like either have zero money left or you want to have a lot of money, right? That's kind of like what you care about. So I feel like that payout, you don't really care exactly the structure.
No, here's where I think that's not correct, right? Is that it's not just that you want to construct a lottery ticket, because there are infinitely many ways to construct lottery tickets, right? But it's that you want a lottery ticket that corresponds to, is this subreddit really happy at the same time that I am? Like that's fundamentally, it's like a group activity, right? Why are we buying lottery tickets on this random stock? right? The reason why we're all buying lottery tickets together is so we can celebrate together when we win. If you buy a perp, you might not get to celebrate when everyone else is celebrating because you got stopped out early. Whereas if you buy an option, if Elon Musk does this or whatever, Trump does that, and you bought some, out of the money options on Trump media or whatever, it's a very simple function of I have a lottery ticket that is branded with this person's rise and fall in the overall world.
Do you think it needs to be tied to the contract specification though? Because you could create an app that does this. So like everyone who uses the app, like their perps are closed at the same time, so that everyone is aligned. Like if your perp is in profit,
Sure.
But not everyone on the subreddit, right? Not everybody in the world who's experiencing this ride with this character or this stock with you.
I also think there's another interesting part about perps, which is like the price impact curve is like more continuous, right? You have to think about how much leverage you're putting and how it impacts the funding rate and how the payouts work versus an option that's like, okay, the market maker quoted me a spread and I kind of don't have to think about these other aspects. Now, in these continuous products, obviously in some limit, you can replicate the discrete thing up to some amount, right? But it's just more like, I do think there is this weird sub part of the world, like every Robinhood user or something, like who really loves these weird discrete things. And I think like it's cool that there's two worlds and that they both can coexist. And I think they will coexist. I think the more interesting thing is, what does an exchange look like that offers you both types of products? And like, how do they interact with one another? And like, yeah, how do you build the thing you just said? Like bet with friends or whatever, right? Like,
yeah, I think there will be a lot of interfaces built on top of perps in the same way that Robinhood abstracts away a lot of the complexity of interacting with options. So, and I think like Hyperliquid, one thing is like we're as a core team, we actually don't want to. We both don't want to and don't have capacity and are not the best people to build this like ultimately like slick UI for whatever user group needs to use it. And so I think there's like a lot of incentive for people to come and build these kinds of interfaces on Hyperliquid, especially as the universe of tradable things expands. And so like builder codes are very intentionally meant to let people run an exchange scale business, right? Where your upside is literally proportional to the volume going through your interface. I think builder codes are basically, I think will push people to build these interfaces like from a practical level. And maybe we can revisit this. It's a bit of a bet, I guess, on like whether perps can appeal to the what people are used to right now.
My takeaway from this is that look, the menagerie of ways in which people will gamble has always been infinitely big. You go into a casino and what you notice is that there's this stuff over, there's blackjack over here, there's roulette over here, there's slot machines over here, and like at the end of the day, like they're all just skins on a Skinner box, like they're all just different ways to lose your money. And some people like these, some people like those. And the right answer is that you have enough for everyone. So I can imagine a world where obviously it exists, that there are many people in the world who want to trade perps and don't want to trade 0DT options. And there's many people who are like, no, 0DT options are my thing. And, perps, there's too many buttons, there's too many decisions to make. Like, I don't want to think about all that. So I think the answer is yes, and almost certainly that's the answer because that's what casinos tell us.
I think the important thing though is that one thing to think about is like when you go into a casino, like I assume that some games like massively rip you off, and then some are like much closer to basically break even. And like I would argue that there's it's not just about like diversity; it's also about improving liquidity and reducing the spread. And I do think perps like uniquely suited to that.
I don't disagree with that. I'm just saying that there is this fair part of the world that like enjoys this other thing also.
Right. Okay, so one last thing that I wanted to share with you. So we got one tweet or one commenter, this guy NVPplus.hl, and I'm just going to read you his comment. His comment is, "Tell Jeff not to fuck this up. He got it. Hyperliquid got it. Just continue building the house. No crack, no coke, no whores, no gambling. If he ever feels the need to feel the dark side of the force, he should contact me. We will find a way to save the house. Thank you, Jeff." So that is NVPplus.hl in case you want to get in contact with him, Jeff.
Thanks. Yeah.
Okay. You're very
none of the above right now.
Okay. But just in case, I thought just you two should have a connection because I know you don't read Twitter a lot.
A lot of good community members out there.
How do you keep it like? Do you just like not know social media? Like, what's your information diet?
No, I read Twitter just to stay up to speed on what's going on, but I kind of trust the Twitter algorithm, which maybe is not the best. I'm not sure, but like it's also, I guess I don't like interact too much with things on Twitter. I kind of just like quickly scroll through and like I trust it kind of like bubble up the most important things, and I think it sometimes does and sometimes doesn't. So yeah, I haven't made much progress optimizing this far.
Okay, well, because we're about to pivot to talking about some of the news that's happened in the last week, and you forewarned, or your team forewarned us, that you have no idea what's going on in the world outside of Hyperliquid. So with that with that as a preface, let's jump into it. So some of the big stories gone on in the last week. First and foremost, we've continued with this SPAC, treasury company, MicroStrategy for X Mania that's been going on for the last few weeks. So the big story so far has been Tron. So Justin Sun, of course, the founder of Tron, is sponsoring a company that's doing reverse merger with a NASDAQ-listed company called SRM Entertainment. There's going to be $100 million private equity investment to acquire TRX tokens, which is Tron. It was rumored that Eric Trump was involved in some way, and then Eric Trump denied that he was involved. But then the investment bank has some ties to the Trumps, so it's all very unclear and vague. Clearly, the Trumps like they like Justin Sun quite a lot. They described him in some tweet as a great American entrepreneur or something. There's another,
which is not true.
He's obviously not American. Yeah, he's not American anyway. He's extremely Chinese. Gemini has filed for an IPO. Bullish has filed for an IPO. There's now actually there's another one of these pipe companies that's doing hype now. It's called Lions Group, and there was an announcement that they may acquire up to 600 million facility, but I think that the actual amount that they'll be acquiring is like in the tens of millions. So we just have this stuff kind of going everywhere at this point. Tarun, what's your reaction to seeing the growing emergence of not just the IPOs being super hot, but now all these pipes taking off everywhere?
It does really feel like the SPAC boom, just except it's a SPAC that's more efficient because you don't have to buy a company, you can just go buy the token. And again, I just think there's like a liquidity cap. There's like only so many people who want to take the other side, like the convertible side or the lending side.
Do you think that's true across assets or for a single asset?
Okay, so I think Bitcoin obviously has the largest capacity. That's sort of an undoubted thing. MicroStrategy has proven it out. People understand how to think about pricing the convertible notes. They're fine with certain duration risk. I think, if you look at the volatility of the non-Bitcoin stocks, forget about the debt, like the selling shares and issuance and buying the actual assets. I think that there's so much more volatile. It seems like the market doesn't know how to price them. And then there's also this kind of weird thing where I forget exactly where this was, but someone was comparing the compensation structures of the different Solana purchasing companies.
I think it was Laura.
Oh yeah, it was Laura, right? Exactly. Sorry, it's late. And I just was like, it actually does really feel like SPACs, where it was like your principals are only paid when you actually complete the acquisition, but not about the quality of the acquisition. And I kind of think like, if that boom, and SPACs are also back apparently, as I constantly keep getting all these emails from investment bankers being like, hey, we're making a SPAC to buy XYZ crypto thing, which
these are all crypto SPACs.
Or like they're all people who are like, I'm going to raise one, whatever. It feels like we're back in that 2021 kind of era. It seems like there's also this funny thing where like these kind of products become in vogue when there's like some macro calamity. It's like COVID, macro calamity, tons of these like weird products.
Do you think current macro calamity.
I don't know what it is, but maybe it's like people get distracted,
just like end of
gambling,
the world
and they're just like, okay, yeah, let's just like do this type of stuff. I find this whole thing, like there's a capacity to this market. There just can't be. And I'm actually more curious what happens when you saw what happened with SPACs, right? Where like the sponsors would be like, okay, no, actually, fuck this. We're not going to like buy a company, and then they return the capital or whatever, minus expenses. What's the equivalent of that for these crypto SPACs? Like they can always go buy the token. There's no like return the capital type of thing as much. Like it's pretty easy to do the acquisition part versus like a SPAC has to go find the company and diligence and whatever, right? There's no diligence here. You said you're just buying Hype or Sol or Bitcoin or whatever, right? Like there's not much else to do there. And so I'm kind of curious how it ends, because it feels kind of weird, because like they will have bought the asset. You know, you don't have this like SPAC like thing where it's like, oh, maybe it's like a sort of convertible option, and in the future it like gets exercised. Like you are actually buying the underlying. And so I guess the real question is like, what's the distribution of premia, right? Like, is this going to be like corporate bond premia where like there's this like huge fat tail of C companies, or is this going to be like super concentrated and like there's MicroStrategy and then everyone else? And I'm sort of biased to believe the latter, but maybe that's me being an old curmudgeon. Maybe I'm not seeing this new paradigm.
Thomas, your take.
Yeah, I mean, within an asset, I kind of agree with Tarim. I'm more just surprised there's like actually demand for a lot of these long tail assets, but it does just rhyme with me so much of like when a trade just gets like way overcrowded and like every random celebrity and person is coming out of the woodwork and also doing the exact same thing. And like trade here being very liberal, it could be like every celebrity is going to announce their own alcohol brand. Okay, and then that got way too crowded, and then there's no more alpha, and or every VC is backing like a D2C, the CPG company, and then that got really crowded and that one didn't work. And so like it feels like it's going to stop working, and then when it goes in reverse, I don't really know what happens.
Actually, you know what's funny is I saw this Bitcoin maxi from like 2015, whose like name I hadn't heard forever. Like it, to give you a word association, she would probably be with like Tone Vase from back in the day. You know, like that's a throwback to like 2013 or whatever. But Leah Wald filed a Solana ETF. Filed for a Solana ETF, and she was like super Bitcoin maxi, you know, like seed oil, red meat, whatever person. And I was like, wow, it's like crazy how fast you can flip Bitcoin maxis in 2025.
But ETF feels like kind of off meta. That was like a year and a half ago. What are you doing launching an ETF?
But launching a Solana ETF, like a Bitcoin maxi.
No,
like
true. I know, but it feels like you're a step behind
wild,
if you're launching ETFs now. Yeah, fair enough. Jeff, what's your reaction to Pipe Mania, SPAC Mania coming to crypto?
I think I have much fewer thoughts than you guys. I will say with the Hype vehicles, it's maybe actually, practically speaking, like it actually adds some value, which is that it's a bit harder to buy Hype for some people right now. It's on chain. I think people don't really know or want to figure out how to deal with that stuff, like custody, etc. So these vehicles may provide a way for different people.
But I mean, the inevitable result, if that vehicle gets big, is it's going to trade at a huge premium to NAV. And then it's kind of like this GBTC style trade where it's like, okay, you're betting on how much this premium is going to move. And some people are buying
but isn't
in
there,
and like, you know, if you...
These don't have like a mechanism where someone can kind of do the ARB and like buy and then contribute.
No, absolutely not. No, not at all. No, these are just buckets of crypto that are trading on the stock market, and they're issuing debt to go buy more crypto. So
to be fair, MicroStrategy has a little bit of an ARB because you can buy the convertible debt at a fixed strike at the offering, and that you're at least kind of. You are taking some price bet on that, but it's a stat arb. Like you're betting something about the asset price relative to this underlying.
Yeah,
but if there's a huge premium, someone else can come in and like raise another one, right?
Well, that's what's happening right now.
Yeah,
kind of. But I mean, like that's the thing. You're not going to knock down because MicroStrategy is so much bigger than all the rest of them, right? And so if you are the biggest and you just have the most liquidity, you just kind of have this runaway effect, like GBTC was not the only Bitcoin trust, but it just had this crazy premium that persisted and then it collapsed and then, whatever, it did what it did. And so if there's one Hype vehicle and it just goes crazy and it gets all this liquidity, or there's only one that's on the NASDAQ and there's some other ones that are in these weird markets, there's one in Japan or whatever, and people are like, who cares? That thing is going to just glom all the demand. And if you look at SBET, right? SBET was the Ethereum one that Consensus backed, and SBET it popped up to like, what was it, like 10x NAV, and then collapsed down to like 1.8x NAV where it's sitting today, or something like this. I'm kind of fudging the numbers, but it that all happened in the span of like 3 days. So depending on, somebody was like, I want to buy Ethereum in the public markets, and okay, you're just buying this like crazy vehicle that like has very little resemblance to the underlying.
It's not so different from like spot futures kind of ARB, right? Like ultimately it converges. Like someone can come and, like, assuming you can borrow and short, like There is price discovery here, right?
There's an expiry though for the spot futures, right? Here it's
sure
like you don't know.
Spot perps are
Well, you need a funding rate. That's the other problem.
Yeah, there's no funding.
Well, like they
there's
say,
no
converge to
cost.
zero eventually, right? Like,
Well, that's
everyone.
I think the question
I think
the question
Carl
is how
Icahn
that
is
happens.
betting this. Yeah, exactly. I mean, Carl Icahn is very much betting in this direction because he's very publicly shorting MicroStrategy, and like people have been shorting MicroStrategy, they've just been getting
But
killed.
do you know what the irony of Carl Icahn doing that is? Is he did the same type of shit with Icahn Enterprises, where he kind of ran this weird Ponzi scheme where he would like basically pay out more than the actual interest and dividends, and he would cover, like, say he was like, I'm going to pay 10% in dividends, and you only had earnings that were 8%. He was just inflating the stock and paying the other 2% to true up people. And the reason he did that was getting added to all these ETFs that were like high dividend yield ETFs. And so like it created order flow for like each new issuance. SEC like kind of went after him for this. But it has a flavor of MicroStrategy in that there's this constant issuance process to like buyback, and like it's funny he's shorting. That's all I'm saying. There's some huge irony to that.
Well, he obviously he learned his lesson, and now he is inflicting. He's trying to inflict that lesson on Michael Saylor.
That's one way of looking at it.
Yeah, but so far with limited success, right? Because like the MicroStrategy premium has just been extremely stubborn, right? This thing is kind of stuck at like 1.7, 1.8, and just will not go down.
Yeah, why is it everyone I ever hear who's like, I'm shorting MicroStrategy is like someone who was like a big hedge fund manager in the 2000s. Like it feels like it's like a like you have to be old enough to be like trying to do it and tell everyone.
It's a good. I don't know. So I don't know. Just kind of a boomer thing that you're like, look, these kids on my lawn talking about Bitcoin, you know, like they don't understand how finance works, something like this. But fair enough. I mean, well, I'd love to see this trend rationalize. Judging for everything I know about crypto, that is not happening anytime soon. And I posted the other day that like every cycle there's like this hot fireball of retail money that everybody's chasing, and right now, very clearly, it's not in crypto alts. It's all in public markets, right? That's where you see these crazy valuations and all this froth, and that's why everyone's trying to take like, hey, we've got the speculative stuff. Can we give it to you, people on the stock market? Will you buy our stuff? And the answer right now is yes, absolutely. They seem to be very happy to do that. So as long as that continues working,
that's risk trading hands, you know.
Yeah, it's all zero sum at the end of the day. Okay, so one last story that I want to address is we just saw the passage of the Genius Act. So to reiterate, the Genius Act is a stablecoin bill that's in the Senate. It has now passed the Senate by a bipartisan margin of 68 to 30. So once again, this is the very stablecoin friendly version. There's another version in the House called the Stable Act, which is a little less friendly than the Genius Act. But so now it goes to the House. There's some negotiation that's going to take place. But Trump just truth socialed that he is demanding no changes to the bill. You know, bring it to my desk as soon as possible. I want to get this thing signed. No riders, no extra additions, no game day shenanigans. So TBD whether or not that's going to happen, but the expectation right now is that this bill is going to get done and signed. On the back of that, today we saw massive rallies in Coinbase stock and Circle stock. Coinbase is up 20% today, including after hours, and Circle is up 40%. Including the after hours trading upside. So Circle is currently trading at something like 40 billion. So absolutely massive rally on the back of the passage of the Genius Act. Quick thoughts all around Genius Act, stocks rallying. Tarun, you look like you're about to jump in.
I mean, the Circle thing was actually kind of crazy. I just have never seen like this type of behavior in a stock in a long time. Like it was kind of. It felt like it was like an S&P edition.
Why it already rallied so much. I know.
Yeah. No, but it felt like it was like one of those weird, like crazy ETF rebalance trades where like, oh, something got removed or added to SPY, and you saw this huge move because like people didn't expect the add or removal. And this felt like something like that, where it's just like nonstop demand all day. I mean, you just like looked at the order book; it was like lopsided all day. I was just like kind of. But it's both kind of crazy, and I mean, also, by the way, isn't it Truth, not Truth Socialed? Now
I refuse to say truth.
Now it's like
I'm not. No, I'm not. It's definitely truth. That's the verb they want you to use. I am not going to call it truth.
Okay. I was just double checking. I mean, I do think it's kind of as we discussed. I think the current act really favors the incumbents, right? So it seems like it should be great for them. So, I mean, obviously there's a lot of ebullience, but does this ebullience look that different than CoreWeave? Not really, to me, to be honest.
What's it, just that it's frothy like CoreWeave?
I mean, I just kind of think like there are a lot of stocks that are not at all like are trading like crypto, and it's like this doesn't even seem that crazy in that light, right? Like Palantir and CoreWeave being the craziest. I mean, Palantir being at 300 billion is just like insane to me. It's like Ethereum and Palantir are the same market cap, which is like kind of. I would never. I don't know. I don't know why, but to me, that's kind of like insane.
Jeff, what's your take? Stable Act passing?
So I actually didn't. I realized it was passing, but I actually don't know the final form it's in. So I would have to read a bit on that to form an opinion. But generally speaking, I think institutional acceptance of crypto, even if incremental, is always good. I'm curious.
Jeff, I'm constantly tickled at how little aware you are of stuff going on in the crypto industry.
Well, did you read the bill? I mean, I think it's just like, I think headlines often also don't tell the whole story, right? You need to like
that is true.
Read the bill and like just maybe
you could read the bill. It's not that long. You could do it today. Yeah.
For us, it's really like I would like to spend more time reading these things, but unfortunately, there's just so much stuff tugging at
so
my
no
attention.
Hyperliquid stablecoin coming soon, I guess, is what we can infer from that.
I think Hyperliquid is a great platform for stablecoins. Maybe it's not like an intended use case, but as like a byproduct of everything that goes on.
Right.
I don't know if this act changes things on this front, but I feel like the fundamental problem of stablecoins is still distribution. Even if it's like zero cost to spin one up, it doesn't mean you get a bunch of competitors to circle, unless I'm misunderstanding something about this market. I suppose like you guys as investors probably think a lot more about this, but naively as like an outsider, it feels like thus far the stablecoins that have basically succeeded in spite of all these other things, just because they had like a unique distribution channel. So I'm not sure how much that changes, but I think Hyperliquid has a bunch of users, a bunch of finance happening on it. Hopefully all of finance at some point. And I think that's a great ledger on which to mint stable coins for people who genuinely need tokenized dollars.
Fair enough. Tom, what's your take? Genius Act?
Yeah, I mean, great. Like anything is better than what we have right now. And I think the Genius Act is actually pretty sound as far as, US legislation goes. So I'm excited to see something happen.
I mean, what was most striking to me, so obviously it's great. We'll probably do this again once it actually gets signed into law, assuming that it does. So, there's like, it's one of these things where there's like, okay, there's like 3 celebrations, so I don't want to do this 3 times. But the thing that's most striking to me that is very emblematic of this moment, at least in crypto markets, is how just absolutely crazy the activity in the stock market was. And if you had looked at crypto markets, you would not have known anything happened, right? Like to me, that is the most striking thing about this whole moment is like crypto market is just like another day, it's like things are all slightly down today or something like that. And in the stock market, fucking insane, historic levels of rallying where I don't know if they like stopped trading at some point, but just like a crazy amount of activity happening on both those 2 stocks. To me, what it's telling me is that like there are very distinct pools of capital right now operating in public markets versus crypto markets. And I have never seen the directionality be that the stock market is frothier and crazier and more retail driven than the crypto markets. But that's the moment we're in right now.
I feel like 2018 was like that, where like equity markets were crazy, tech venture was crazy.
What equity? There's no public companies at that time. I mean, in crypto.
Oh no, I don't just mean crypto equity. I just meant like fintech equity. Like the fintech equity boom in the late 2010s had this thing where it's like the fintechs were roaring and crypto was kind of like flat to nothing. And it
Sure,
that sort
sure.
of feels a little bit like that. Like this feels more like the
Well, I
fintech
think, like-
equity boom.
Well,
than
starting in 2020, we started getting some public markets stuff. Even before Coinbase went public,
Yeah.
you had like Long Island blockchain and all these companies being
Well,
like, we're
those were all
doing
the
blockchain
fake
stuff, and
ones.
they'd get a spike.
Yeah.
Well, no, but like you would see how public markets responded
Yeah.
to like blockchainy stuff. And it was meaningful, but it was never crazier than what was happening in crypto, right? Crypto was always crazier than what was happening in public markets, right? Like if somebody got a whiff that like some normal like GE was doing a deal with like IOTA would just go absolutely fucking bonkers. You know, like this thing would go up 30% in like 2 minutes. And now it's like GE announces anything with some crypto thing, I don't even know they would move a chart. And on the other hand,
Well, I mean, does anyone care
is
about
like buying
GE
Bitcoin?
in 2025?
That's what I'm
also
saying.
the
If GE
other
announced it was
question.
buying Bitcoin, like GE would go absolutely bonkers right now. So I've never seen that asymmetry. That's the point that I'm making. So I don't know how, like, this can't survive that long, right? Like this has to revert at some point. I just don't know when and how. But to your point, Tarun, like maybe it's because something really bad happens, and that's why people kind of back off.
Yeah, it is weird to see all these companies happen, but then I look at the rest of the normal equity market and like this is why I'm bringing up the CoreWeaves and Palantirs. They look like 2021 SPL tokens, you know, like they really, it's like the valuation versus usage being out of whack was like, it
Damn.
is like a little bit like that.
Be careful, man. Be
I know.
careful.
I'm not trying to get the Palantir
You're-
subreddit to like attack my house. Please do
Yeah,
not.
yeah,
I'm
these are
giving
not
you
the
guys
people you wanna
props
piss
for
off.
getting
I
to
just
300
wanted to-
billion.
just
I'm
wanna tell you,
giving
just
you
wanna tell
props. Do not egg my house.
Yeah, no, dude, they're not going to egg your house, dude. They do a lot scarier stuff than that at Palantir. All
Hey,
right, Jeff, we're up on
actually,
time.
didn't the CEO say he wanted to like have people get pissed on or something who are like shorting the stock? He had this like crazy,
Get
ridiculous
pissed on?
rant. Yeah. Like it was like some very crazy statement. So like, yeah, Palantir people. I'm not saying it's bad. I'm just saying it's congratulations for getting to Ethereum size. First off,
That's right. That's
I
right.
just think,
Congratulations to Ethereum for getting to Palantir size is what you mean.
well, Ethereum was already at that market cap.
Yeah, but
area.
yeah, that's how we.
But
that's how we
the
denominate
reason I'm
300
saying,
one
the only
Palantir.
reason I'm bringing this up is like the kind of retail fervor in equities overall. That's like frontier tech equities is like what crypto in 2021, early 2022 felt like. It's like it seems they're kind of similar structurally for some reason. And again, I don't know why this macro doomsday thing seems to be the common thread, but it does feel like there is something.
Well, you're not wrong. So Jeff, as we wrap up, going into the end of the world, what do you want people to do? Where can they find Hyperliquid to make their final trades in the last days that we have left?
That's bleak.
Anything you want people to check out, or how should they follow what's going on in Hyperliquid land?
Yeah, you can follow Hyperliquid on Twitter, HyperliquidX. I'm chameleon_Jeff on Twitter. I occasionally post very long blocks of text.
That's right.
Yeah.
And he does not read your tweets unless they come on his timeline. All right. With that, we got to wrap. Thanks for coming on, Jeff. See you all next week.
Thanks for having me, guys.